Today we're going to talk about why growing dividends are the ultimate income stream. First, we're going to take a look at 5 individual stocks that are currently part of the Dow Jones Industrial Average and discuss their dividends. Then we're going to take a look at the S&P 500 dividend. And last, we're going to talk about why qualified dividends from publicly traded stocks are such a great deal when it comes to taxes. The first stock that we're going to look at is Caterpillar. Here's the dividend back to the year 2000. Over the last 25 years, CAT's dividend has compounded at 9%. Excellent inflation protection. Core prices have basically doubled over the last 25 years, but CAT's dividend, your income stream if you've invested in the stock, is up 8-fold. If you had put $100,000 in CAT on January 1 of 2000 and spent the dividend income stream, today your principal in CAT would be worth $3.35 million. Amazing growth of your principal and excellent protection from inflation. Here's what inflation did to your principal over the last 25 years. $100,000 in the year 2000, grown for core inflation over the last 25 years, is now $180,000. You would need $180,000 in late 2024 to equate to $100,000 on January 1 of 2000. Our second stock is Coca-Cola. The dividend has compounded at 7.5% since the year 2000. It's up 6-fold. Excellent inflation protection on the dividend for Coca-Cola. Your principal in Coca-Cola has basically kept pace with inflation over the last 25 years. If you put $100,000 in Coca-Cola in January of 2000 and spent the dividends along the way, your principal today is worth $214,000. Since core prices have nearly doubled during that time, you're just a little bit ahead of inflation. Our third stock is Sherwin-Williams. This has been a tremendous winner. Since the year 2000, the dividend has compounded at 12.2%. It's up 17-fold. If you had made a $100,000 investment back in January 1 of 2000 in Sherwin-Williams and spent the dividends, today your principal will be worth $5.49 million, up 55x. Our next stock is a well-known dividend payer, Procter & Gamble. Since the year 2000, dividends up 6-fold. It's compounded at 7.6%. This is great inflation protection, excellent growth of your income stream. Your principal growth in Procter & Gamble has been good. If you put $100,000 in back in the year 2000, spent your dividends, today your $100,000 is worth $321,000. Good inflation protection on the principal. Those 4 stocks all gave outstanding dividend growth. Tremendous winners, all of them. Now let's take a look at a stock that didn't work out so well and you could have got sideways on. I'm talking about Boeing. Because that's life, right? You can't always pick winners. And this demonstrates the importance of having a diversified portfolio when it comes to investing for dividends. Eventually you're going to get one wrong. So let's take a look at one. Boeing was a real winner from 2000 to 2020. 14.3% compounded dividend and 14x increase in the dividend. It was a great ride on Boeing until they hit the wall in 2020 and suspended the dividend. Here's what happened with the principal. If you had invested $100,000 in Boeing in January of 2000, today you have $371,000. So you're up almost 4x. Not all is lost. Good inflation protection on the principal, but really a disappointment to see the trouble that this company has gotten themselves into and to see the suspension of the dividend back in 2020. Now we're going to move on to the S&P 500 and see what kind of growth we get with the dividend and what kind of inflation protection we get both from the dividend and from the principal. Here's the long view on the S&P 500 all the way back to the year 1900. 125 years, S&P 500 and its predecessor index compounded dividend at 5% for over a century. In the last 25 years, S&P 500 dividend is up 4x. It's compounded at 6%. Plenty of inflation protection. One thing that I think investors should take note of is the lack of volatility in the dividend stream from the S&P 500 when you compare it to the price movement of the S&P 500. You can see that from the 2008 recession, we did have a drop in dividends. We recovered that dividend decrease fully within 4 years. It was a 25% drop approximately, and we recovered that loss in 4 years on the dividend stream for the S&P 500. But when we look at pricing for the S&P 500 and stocks in general, you'll see that there's a lot more volatility and a lot less reliability on stock prices versus dividends. Here's what happened to your principal in the S&P 500. If you put $100,000 in the year 2000 and spent the dividends, today, 25 years later, you're at $414,000. Plenty of inflation protection when you're up 4x and core prices have basically doubled. Now, one thing I want to point out is that stock prices are not as reliable as dividends. Here's the 13-year period from 2000 to 2013 where the stock market had no appreciation. But if you recall, during that time period, dividends were increasing. So dividends are more reliable than stock prices. One of the great benefits of qualified dividends from publicly traded stocks is the preferential tax treatment that you receive on those qualified dividends. I'm not going to spend a lot of time on this slide. I just want to highlight that for a lot of people, you're probably going to be in the 15% bracket. If you're married filing joint, that's $96,000 to $600,000. You're going to pay 15% on your qualified dividends. Compare 15% to paying 22, 24, 32, even 35% if you have ordinary income, rental income, IRA distributions, things like that. The tax treatment of qualified dividends is powerful stuff. So let's add it all up. If you do a good job of stock selection for dividend growing companies, you can make a lot of money. Not only can you grow your principal, but you can also grow your income stream, and it's awesome. The S&P 500 offers a nice way to get dividend growth and capital appreciation over a long period of time. And finally, the tax treatment of qualified dividends is outstanding when compared to the tax treatment of ordinary income, rental income, real estate income, IRA distributions, annuity income, things like that. If your financial advisor isn't talking to you about dividend growth strategies, please give my office a call. We would be happy to give you a second opinion on your investment portfolio. I hope this video was helpful. I hope it gets you thinking, helps you better analyze your investments, and overall improve your family's financial plan.